Good morning, welcome back. We were off last week because I am setting up a membership platform for continuing small group mentorship and one-on-one or small group coaching with the intention of taking the load off of producing loan officers or brokerages and helping train support staff, or if you are a self-producing or self-processing originator, I don't know why I get that wrong every time, self-processing originator, and helping, with, like I said, small group and one-on-one coaching and mentorship. So luckily you guys are all here now. Before we have all of this set up, we will go to more of like a membership platform. We're still setting it up and getting the website. We just dropped a couple $1,000s getting that all set up and ready to go for everybody. There's been such a great response to people saying like, hey, I really need this. Can you please keep doing it? And so we decided we would. I say we because my husband does all the technical stuff and all of the like back behind the scenes. He's my lights, camera, action guy. He's my lights, camera, action guy. Okay, so I'm still gonna give it a couple minutes. We're just shy of 10 o'clock. I know that there's one person specifically that I don't see on that was going to get on today. But before we get started, does anybody have any questions, or anybody who's gone through and watched the YouTube videos and have any sort of, I guess, like implementation questions or anything they're currently working on or stuck with? No, it's fine. Nobody? Awesome. I should have brought my music today. I normally start these with music and I didn't today. I know. Oh, let me turn down the sound on my email. Let's quiet that. Okay. Well, I don't see her on, but I'm going to just really quick in the links. I'm going to drop the link to the YouTube channel so that you guys know where it's at and you can reference. We usually try to get these posted within a couple of days. We didn't quite realize how long it takes to like buffer and edit some of these. So I apologize that some of them took a little bit longer to get posted than others, okay? One of the things that you'll find, even if you go through the videos on YouTube, is there becomes this gap in what you see, hear, understand, and then going to implement it. And so what I try to do is not only give you the background knowledge of what it is, how to do it, but then walk you through the physical aspect of actually doing the loans. Oh, perfect. There she is. Because the bridge and understanding most of the time with people coming into broker or being new into broker is what these same things mean. And I know I'm using some vague terminology, but it's because it's a broad scope of understanding, like understanding what these tasks or words or actions mean in the environment that people were in before, meaning retail or a different brokerage. And so what happens is, and what I was telling someone the other day, is that these trainings were born on the back of my failures, the struggles that I had in transition, the things that I learned the hard way coming out of retail and into broker, or the things that even when I was in broker that until I, like sometimes I would work with one loan officer and they would only submit to like one bank. Or so many of you may have been in the position where you use like UWM the majority of the time, which is great, but what happens when you don't use UWM? Like for us, we had to make a decision that for a while we didn't use UWM, as many people did, right? And that's the benefit of being a broker. But then what happens, right? And so you get used to things like having processor assist and having, disclosures sent directly from the banking portal, which doesn't happen at every lender. For example, at Remen, you have to broker disclose, upload your broker disclosures, and then they redisclose just the loan estimate. They don't redisclose the whole file. So learning some of those nuances especially right now in this environment where we're not quite as busy as we're expecting to get, are going to be of great benefit to everybody who can get some of that experience and knowledge and training under their skin before we hit this crazy sauce that everybody's telling us is going to come in Q3. Okay. So that being said, one of the things that I went over, I think it was in a processor training that I didn't go over in the LOA training, which is this one, is, you know, when I was in retail, the file came to me in the system that it was in. And when you're in retail, you always only work in one system. And that's just not the way that it is in broker, no matter what system, whether you're in Arrive, Encompass, Calyx. And so what happens is you have to learn how to move and maneuver files through multiple lenders. But what I try to explain to everybody in here is, if you think of every lender as a different social media platform, then you begin to understand how simple it can be. Okay, so like if you in here have, well, I mean, most of you in here found me from Facebook, so you all have Facebook. But then there's also Instagram, there's Twitter, there's TikTok, right? And so if you think about every lender like a social media platform, and your loan like your, whatever it is you're posting, video, meme, picture, okay? So if you think of your loan file as your content, you're going to upload your loan file into the lender the same way that you would upload a picture into Instagram or into Facebook or into Twitter or onto TikTok. It's a little bit different on TikTok because it's more of a video platform, but still the same idea, okay? So what I wanted to talk about today is, and we're going to be about half the time today because I don't have my normal setup. I'm in Denver instead of New Mexico, so I'm in a different environment. But what we're going to talk today about is the difference between different lenders and their platforms, and like best practices, like maybe, so since this class has a lot of loan officer assistants, and third-party processors, a lot of times you don't know specifically right away where it's going to go, okay? And a lot of loan officers have spent the last, I don't know, like 3 weeks, month, but basically since the beginning of COVID, building pipelines and keeping track of people who want to refinance, but it's not quite yet the best deal for them, and it's going to be down the line. But right now, we don't know where those are going to go. Like I also have a pipeline of about 20-something people that it doesn't make sense for them right now to do this. So that being said, what I want to talk about is, how do you structure your client file if you're in a situation where you don't know where it's going yet, okay, as a processor or as a loan originator. So what you're going to do is you're going to take your normal app, right? You're going to take your normal app, you're going to pull credit. Now, one thing that we do, and I understand that not every brokerage has access to this, is that we elected to sign up for, sorry, I'm going to change the view on this really quick. Give me 1 second. Speaker view. Okay, there we go. Much better. Okay. So one of the things that you're going to want to do is, that we do, that I know, this is like throwing me off that I'm in my kitchen, you guys, I'm sorry. It's COVID, go with it. We subscribe to doing soft pull credits. We use Advantage credit, and so we pay, I want to say it's like $6 or $7 per bureau. We pull 2 bureaus. And so a lot of times if we're in this environment where we don't know if somebody's going forward yet, because of the environment that we're in, we'll do a soft pull on their credit, and then we'll do a hard pull if they decide they want to move forward. So anyway, what you want to do is pull the credit and make the file. Now, we subscribe to Loan Sifter. Hopefully all of you caught Anthony Costa's sales pipeline this morning. And one thing that I didn't know, and that, like, this is one of those things that you learn the hard way, right? Is that like Caliber's pricing in Loan Sifter isn't up to date or accurate because they have unpublished incentives on purchases. But this is also true for other lenders. So make sure that you're watching your emails, because sometimes like Royal Pacific or Nations Direct, or I'm trying to just think of like the lender, will have incentives on certain files, and it won't be a published incentive. It's something that they'll send an email out. And then what happens is when the loan is locked, they will apply that incentive. So it's not in their published rates. Okay. So you still, even if you subscribe to Loan Sifter, you still have some due diligence. I know that I price in Loan Sifter, and then I hop out and I price in Universal, Nations Direct, and N2. N2 is a sister company of Equity Prime. Okay. So once you do that, let's say you've priced the file and you watched UWM's launch yesterday and decided, oh, I'm going to go in and price some of these rate and term refis, and it's a go, and we're going to use the Conquest program. Okay. The next thing you're going to want to do is anytime you structure a deal, no matter what system you're in, you want to save that 3.2 file. I don't use Encompass. I've never used Encompass on the originating side. I've only used Encompass on the user interface side as the lender. So some of these things I won't be able to tell you in practical terms on how to do them because I don't operate in Encompass, but extracting the 3.2 and saving it in the file. Okay, so in Calyx, here, let me screen share really quick. But I got to make sure that I have not a live file in, because I did that once and it was no bueno. Okay. Okay, so I'm going to share my screen really quick. Okay, so this is our dummy file. This is our test file. His name is Jaime Jones. He works at the taco shop. We love Jaime. He makes us the best tacos. He's a stud. Sold his condo, was going to buy another property. Okay, so that was this file. But in Encompass, and like with anything, there should be somewhere where you can export. So you want to export the Fannie Mae 3.2 file. And we save these in borrower folders. We save them on the OneDrive. That way our processors and everybody else has access to the files. We've gone through this in a couple of other trainings, but since I'm doing this live, I'll just show you really quick. So we have a training file. And you can see we've already saved Jaime's point file several times in the trainings. Okay, so we would just save that. And then what you're going to want to do is, let's say we talk to Jaime and he says, yes, I want to move forward. Then all you're going to do is you're going to, let's say you're going to do the Conquest from UWM. Okay, so you're going to go into UWM, and this is true for any lender. Okay, so it's not just specific to UWM. You're going to go to UWM and you're going to start a loan. Every lender that I know of, and I personally, our broker just signed up with 13 of them, but every lender has a place where it says start a new loan, and it gives you the option to manually enter it or upload your 3.2. Now, breathe. It just needs you to breathe, okay? It doesn't matter if it's a new system, okay? You're just gonna upload the 3.2 file the same way that you would upload a picture into your social media. Same way you would upload a picture into LinkedIn, the same way you would upload a picture into Facebook, the same way you would upload a picture into Instagram, okay? Now, every lender does something a little bit different in this import place, okay? Some of them are very easy. They just take the data from your 3.2 and they let you go on. Some of them have hard stops about what data needs to be provided before you can even register. So for example, if you upload the 3.2 to UWM, it automatically generates a loan number, okay? Automatically, whether you have everything or not, okay? Then you're gonna go into UWM and try and do stuff like select a product and run AUS, and you're gonna get error messages at the top about the information that you're missing that the system needs for you to complete before you can move on to the next step. On the other hand, Remin, when you upload into Remin won't let you register the file, meaning get a loan number, until you've completed certain items. The loan officer information, the product, your mortgage insurance, right? So every lender is going to have some nuances in that registration process. I'm trying to think. Anybody that uses Encompass is pretty much the same. They're going to have a lot of the same hard stops. So off the top of my head, 11 Mortgage, Nations Direct, Universal, Home Point's a little bit different. We're new to Home Point. Some of their nuances are a little bit strange. And Flagstar, we're new with Flagstar. We just closed our first loan over there as well. Okay, so the thing is though, is that take note as you work with these different lenders, take note on what their requirements are. That's going to do is help you. That's interesting. Hold on, please hold. That's going to help you take note on what data to make sure is in your 3.2 file as you get more experienced in this space. Okay, so the other nuance is going to be running automated underwriting. You can do underwriting and import it into the lender, or you can do it in the lender's platform. Now, when would you do one over the other? I almost, as an originator, okay, so I'm gonna speak to you as an originator. If you are a processor that's running AUS, I always run that AUS the day I get the file. And here's why. That's our washing machine making that really awful, like a plane is landing in my house sign. Will you go pull the plug on that, please? That's really amazing. My house is about to take off. Give me 1 second. I have my son go stop the washing machine. Yeah, go do it, please. I'm on a live call. Thanks. Appreciate ya. Okay. So the reason that you would do that is very simple, but it's something that you need to know because this is one of the things that you'll learn the hard way as an originator and as a processor, which is when you run AUS, whether it's Fannie or Freddie, whether it's LP or DU, you are assigned a case number. Okay, let me show you. Let me show you what I'm talking about really quick. I'm going to share the screen again. I'm going to show you in Calyx, and then I'm going to show you what it looks like on the actual findings. So let me screen share really quick. I'm not really sure where my, okay, here we go. So if you are in Calyx, we just go up here to interfaces and we run Fannie, okay, and desktop originator. Now, I'm going to cancel this really quick. When you run AUS, which I can't remember if we tried to do it on our test. Okay, so we haven't tried to run it on our test example because we didn't have a credit report because it's a test example. But what would happen is once you try to run, no matter what your findings are, you're going to be issued a case file ID number. It would show up in this box here, okay? And what that means is that case number basically assigns it a file number and locks you into that version of DU or LP. And this is really important. About a week and a half or 2 weeks ago, I have to go back through my emails, but on a Sunday, Fannie Mae and Freddie Mac were going to make updates to AUS that were specific for COVID. So if you had not run any of your files before that Sunday, you were going to be subject to the new underwriting guidelines that were coming out and being issued on Sunday. So we went in and we ran every file that we could, whether it was a property refair or whatever, we went in and we ran every file that we could that hadn't already been run before Sunday so that we could get a case file ID number, which would lock us in to the 10.2 version, whatever it was. I think it was 10.2. Sometimes it's like 10.2A or 10.2B, into that 10.2 version, right? Now, if you, the only lender that I'm aware of that does not let us run it in our own system is UWM. I can run every other lender in Calyx by requesting sponsorship in DO or DU, whatever version you use. And that locks us into that version. The other reason this is important is if you hold a file, right? Let's say they're out shopping. Let's say you've got a TBD, they're out shopping, you don't know what their pre-qual is going to be yet, and you don't run their AUS. You guys, Fannie Mae changes their guidelines 3 times a year minimum, okay? They change usually like January, July, sometimes September, sometimes November, okay? I don't know if this is published somewhere. This is just from being in the industry for 13 years and knowing that like these are typically the days that this stuff comes out, like a January launch effective date, a July launch effective date, and then usually like a September or November launch effective date. That means that 3 times a year, they make adjustments to the guidelines. And if you're not listening, if you're not registered for these emails, or you're not with like a lender who's going to shoot you out these emails, what's going to happen is you're going to approve a loan, they're going to go out shopping, the guidelines are going to change, and then you're going to go run AUS and you're not going to get an approval. Okay. And that's kind of like, that's something to be very aware of right now in the COVID environment. If you had clients that you pre-approved before that, you know what, let me just do this. I'm going to go look at my email real quick. I'm going to say Fanny update. You're just going to have to watch me look at my screen. Let's see. So if you approved a buyer before, or if you approved a file, like pre-approved or pre-qualified a file, but did not run AUS before April 18th, the weekend of April 18th. Here, I'm going to screen share this with you. Okay, so April 18th was when they were doing the updates. Of course, it's going to take forever, so you guys can stare at a blank white screen. This is awesome. This is what we do in this class. It's live. It's real live. Okay, so April 18th. This does not look like the email that I just opened, because it's not. We want this one right here. That is not the email that I just was reading. Okay, scratch that. But anyway, I don't know what happened to the email I was just reading. But anyway, the updates went up April 18th. So if you were working on a file and you had otherwise pre-qualified them but hadn't run AUS because they were a TBD or something, you need to go in and run it now, because the underwriting guidelines changed that weekend. Okay, there's not a whole lot that you can do now. Let me show you some. I can't really show you because I'd have to go into a specific borrower file, and I don't want to do that because we publish these on YouTube. You can run these preliminary without assigning it to a lender and still get a case number and then go back and do the lender. If that's something you want more information on, send me a message either in Facebook or email, and I will do my very best to create a dummy account and see if I can't. Or what I'm going to have to do is go into an actual file but take screenshots and then put it into like a video for you guys, because I don't want to have actual client information like up on YouTube. I'm pretty sure that'd be a big no. Okay. So I totally forgot what I was saying. You can run preliminary conventional findings outside of the lender system without assigning it to a lender and be issued a case number. Then let's say you decide you know where you want it to go. You can go back into AUS, you can go back into DU, you can rerun the findings and assign it to your lender. Is there anybody in here who has like absolutely no idea what I just said? Just like put something in the chat box. If you don't say anything, I'm going to assume that you do. And my processor's in here. I'm pretty sure she knows the majority of what I'm talking about. She's not really run preliminary findings, not assigned to somebody before. So she may not understand everything that I said, but I know we've gone over this before. Nobody? Like, do y'all just have me on like a side computer? Okay. Isabel, unmute yourself and say something so I know that like it's like we're legit real. Who's vibrating on the camera?
You're good. I mean, okay. Most of that makes
sense. Good.
Okay, yeah. I can hear you.
Okay, good, thanks.
I can hear you also.
Like 2 weeks ago, I had, that's Robinson. Go give that to Deacon and Dad. Okay, good, because like 2 weeks ago, like I was just on and going and going and going, and then all of a sudden someone was like, we can't hear you. And I was like, how far back? What was the last thing you heard? So now I'm like super just want to make sure that like people can actually hear what I'm saying. Okay, perfect. So now I'm going to screen share with you something else that I do. I guess I'll just do it like this. Okay, so in my borrower files, let's say now what you see here, okay, you see that I have, this is the Jones file, okay, and what you see here are several different point files. Now, I train all my people about this. When you download or export a 3.2 file, just know this thing about me that like when I say you need to do something, I'm not trying to be bossy, like you need to do this. I'm saying like the way you tell your kids, like you need to brush your teeth. Okay, like, well, maybe that's not a good example because I would totally be like, you need to brush your teeth. It's kind of like, you know, it's a best practice. So like when I say you need to do this, it is because it's a best practice, and it's because I've learned the hard way that like, if you don't do it this way, and it's fine if you don't do it this way, but you need to find a system that works for you because you're going to get caught in these places. Because I got caught in these places. And you guys, this whole thing is created and born off of my failures. Okay. I don't fail as much now as I used to. We're quite successful now, but I know the challenges. My son is making fun of me right now, and I'm about to boot him. Okay. So what I want to share with you is when I'm doing files for clients and I export it, even if I'm putting their Fannie Mae file in Fannie Mae 3.2 in their file, I always label it something after the point, but before the .fm. Because what happens is when you're really, really busy or you've been working in several files and you go to export something or print something and save it and you're not paying attention because you're working really fast and you're really busy, all of a sudden it saves somewhere and you have no idea where it just saved. And then what you do, watch this. So if I go to this file and I'm like, where did that point file just go? Okay, I can come up here and I can search .fnm, okay? It's gonna search my entire folder. Look at what happens if I don't save it with the name behind it. I've got one in this file, I've got one in this file, I've got one in this file. So what we started doing, and what you can see here, is we do point Jones, which is the last name of the borrower, and we save it that way. Okay, you just go in and rename it. And this is exactly the reason why. Because when you're printing documents, when you're saving stuff, the computer likes to be smart, and it says, oh, you've saved the last 5 things in the Jones file, but then let's say you go over to the Smith file and you're trying to save something in the Smith file, the computer goes, oh, you want to save this in the Jones file? And we're not always paying attention. And like, this is something that happens to me all the time. Okay, so I've learned to make sure that I'm labeling documents not only in the borrower file, but also in my point files so that I know. The other thing that I do is if I, like, for example, if I have a borrower who is shopping and they're just kind of all over the board. Like, let's say I've pre-qualified them for 350, but they're looking all the way down to 280. If I run numbers for them, if I go into Calyx and I run a new set of numbers, what you will see is I might save this and I might name this, let me just go Jones 285, okay? So now I know when I'm looking in here, this is the Jones file for 285,000. Or if they're doing, so like what my processor is seeing now is a lot of people who are refining with me. So it might say Jones refi, okay? We also have people that this is not their first refinance with us. So this one might say Point Jones refi 2020, okay? Because sometimes when here's what you maybe don't know about me. When I started, I had a processing company. I was processing for 3 different companies at one time. I dropped one of those companies, and then I was processing for 2 companies, and then I got my originator's license so that I could third-party process the right way, the legal way. I didn't know the way we were doing it, or the way that they were paying me wasn't quite the right way. And then, well, I mean, I guess it's fine. It's fine. We're good. Nobody's looking for me. I promise. But then I started originating, and at the time, because I had worked in retail, I did not know how to work in my community. I only knew how to talk to people and sell loans over the phone. So I didn't know how to bridge this gap between my own comfort level and working in my community. So what happened was, as I took what was considered the lowest lying fruit, which was at the time in 2006. So I got my license in 2014. In 2016, that was the first time it was the lowest rates we'd ever had. You literally could wake up and just say you do mortgages and have 3 loans, okay? But the thing is that because it was so plentiful, people didn't want to work hard for people with lower credit scores, like under a 680. Some banks in and of themselves don't even touch loans under 680. Like, I think it's KeyBank. Doesn't even before COVID, didn't do any loans under 680. So what I started and where I grew my business was people who had been told no by another lender, or who, you know, like I just kind of positioned myself as more of like a, hey, we work with people with less than perfect credit. So what happens when you grow a pipeline like that is that I became an advocate and a financial advisor that says, hey, we're going to have to use this tool. This loan is a tool to get you into your home, but it is not your forever loan. So there were a number of our clients that we bought with down payment assistance or FHA, and we knew that within 6 months to a year, they were going to come back and refi, because that was our plan from the very beginning. We needed to use a specific tool to get them in, and then we were going to look at refinancing them into their forever loan down the line, okay? So for us, saving the 3.2 files as purchase or refi became really, really important, because we had multiple files for the same person, and sometimes in the same year. So like if somebody closed in February, they were refining by October or November, either into a streamlined FHA or into a conventional loan. Okay, so you got to find ways to organize your pipeline, not only with the documents. Now, I go into this in more detail in a previous training on how to label your documents inside of your borrower file, so that you're not wasting time looking for documents in a borrower file. The short version of that training is always start with the name of the document, the year of the document, and then the name of the borrower. Because if you have more than one borrower and you just put W2 19, what borrower is it for? Okay. So that's how we started doing. I mean, this is born over years and years and years of being a processor and an originator. Okay. Real quick, any questions over the just kind of working in the space with different lenders? Like, either do you have a question specifically of hurdles that you've overcome, or questions about what I've talked about, the difference in that initial upload into various lenders' portals, and like how to keep your file structured so that way you're not creating more work for yourself if you decide to go to lender A versus lender B.
Jackie, can I ask you a quick question about Point?
Yes.
So I haven't finished watching that video that you just sent me a little bit earlier, because I was asking about how to upload one of the applications on Point. Mm-hmm. So when you upload it, if they put the address of the house that they're looking at to buy, mm-hmm. everything gets loaded up to Point, but I'm just doing a pre-approval, so I don't want that address there. How can I erase it? Or do I have to go in and manually input everything? Where is the application coming from? So I have Flowify, and they filled out the application on Flowify. I accepted the document, saved it to my hard drive, and then imported it into Point. Then when I realized that the address went in, mm-hmm. before saving it, I was like, oh shit. So I just closed out of the whole thing because I couldn't change the address.
Okay. So Okay, let's do this really quick. I think I know how to answer your question. I'm going to show you. If it doesn't answer your question, just let me know. Okay,
Okay.
so what Monica is saying is she got a 3.2 file from Floify, downloaded the 3.2 file, saved it somewhere on her system. Okay, then she opened a new, let's just say it's a conventional purchase. So she opened a new Calyx, just like this, went to file, went to new, went to a new loan, open a new borrower file. Okay, then we have this blank screen. And then what you do is you file and you import it, and you want to import the Fannie Mae file. Okay, so we're just going to go into our training folder, because that's our Jones folder for this. Okay, and we're going to import it. What she's saying is that this came through with an actual address, correct? This right here, the subject.
Yes, that's correct. Instead of it saying TBD, it actually the address came through.
So all you need to do is just delete it and then just manually type in. You can leave the city and state, but just put TBD here and save it. See Jones, TBD. Okay, and then we're going to save it.
So the interesting thing is it wouldn't let me touch the street address. It was like blocked out. That's why I was like, what?
So it may be depending on the, are you a broker owner or originator for a brokerage?
So I'm an originator for Nexa Mortgage.
Okay, so you may want to check when you open this, how, if you open it as a prospect or a borrower.
You have to open it as a borrower. They said never do as a prospect.
Then they've got this locked down. I would imagine that they then have the parameters locked down for this. And so what you may have to do is go into the Floify app and take it out and put TBD, resave the Floify app, then download the 3.2 again and re-upload into Calyx.
Okay, got it. Got it. I'm going to do that then.
Now, the other thing you can do is, that's fine if it has the address, take out the loan amount. Just go down here and take out the loan amount.
Okay.
Because what you're basically, kind of what I hear you maybe mulling over is, shit, now I have 6 points and I have to disclose because I have an app, but you don't really because it's a pre-qual. So just take the loan amount out.
Okay.
And then you can get out of it. You can also, let's see, address name. Those would be the two easiest, would be to wipe out the address here or just take the loan amount out. Just keep the purchase price and everything here, almost structure it like it's a VA deal with 0 down.
Okay.
Okay, and then just leave it like that. I'm sorry, take this out. Or put like 100% here because you don't know yet. Or just take the appraised value out. Just take something out of here. Okay.
So it's not complete. Okay.
Right, so it's not complete. And then you can resave this as, so if you just save it, it's going to update the 3.2 that you imported, wherever you imported it from.
Got it.
Okay.
Okay.
And then, well, sorry, it's going to save the data in your point data, but whatever changes you make before you upload it to the lender, you're going to have to re-export it.
Okay.
Okay.
So why would you re-export? Because you changed like the main, as opposed to just saving it and then bring it up to the lender?
Because it only saves it. So when you save, in Point, so we don't have Point Central. So your system may be different if Nexa is on Point Central. So we're on individual Point because we use the OneDrive. But what happens is your Point data files are saved. In our case, they're saved on the C drive.
Okay.
That means when I hit save right here, okay, and I close this out, and then I type in the borrower's name here, Jones, okay, when it comes up as the Jones borrower, because I've typed that in, it's pulling from this C drive.
Oh, okay.
Okay, it's pulling from this C drive here, point data. Okay, when you open it as a borrower or a prospect, this is how it's saving. Okay, these are all of our borrowers when we save them. Okay, but it doesn't save onto the 3.2 file. It doesn't save onto the 3.2 file because the 3.2 file is a zip drive.
Okay.
So in order to, if you make changes, you have to re-zip the changes and download the new 3.2 file into the borrower folder and then re-upload it into the lender system.
Okay.
Okay, because otherwise all you're doing is saving the data on your C drive, or if you have Point Central, which Nexa may because they're that big, all you're doing is saving it in the point data file, not in the 3.2, which are two different things. You have point data file and 3.2.
Okay.
So for example, the point data file would be like, let me think. The point data file would be like your Google Drive, okay? So all your docs are stored in Google Drive.
Okay.
But if you wanted to upload, if you wanted to change a specific document, you have to open that specific document and make the changes in there and then reprint that document. It's not going to just update just because you open the Google Drive. You have to remember that in order, when you make those changes, it only makes the changes in Calyx. In order to make those changes go to the lender, you have to repackage that. You have to re-close it back up and export it and then re-import it, right? Because the whole purpose of a 3.2 drive is to keep the data secure. So you wouldn't just, now the only way that you can save, and you can save on top of it, like for, let me just share my screen again. Hopefully I'm not confusing you, but let's see, where is my, okay. So the only way that it would like to not re-export it, which really is, I mean, you're still re-exporting it no matter what, but the only thing you could do is save on top of it. So like, let's just say, like this is my updated Jones 285, or no loan, right? We took the loan out. I'm still going to go, sorry, let me do that. I'm still going to go file and export to 3.2. I just don't have to save it as a new name. I can click on this and it'll overwrite it. So
Okay. I see what you're saying.
But I still have to re-export it because it still has to come out in that secure 3.2 zipped up file format.
Okay.
Okay. If you don't do that, then when you go to upload, you'll make all the changes in Point, but then you'll go to re-upload it into the lender and it won't transfer that data and you'll be mad because then you'll have to do it again. Okay. This really cool thing because I guarantee not a single person in here besides me knows this. Okay. I want to share this with you. It's really, really cool. And you may fall in love with Calyx. I hate to say it, but you might. Now, we don't utilize this a lot because we don't utilize the lenders that are available for this, but I want to show it to you just in case you guys are. Okay, so let's say we have this file, okay, and we're going to go into, now, really quick, let me backtrack before I jump on this really exciting thing. You can also run Freddie Mac in Point. So if you want to run DU, no, I know it says Freddie Mac here. That's the old version. Do not run Freddie Mac in here. You will gray your hair. You will get pimples. You will add wrinkles, and you will want to pull your hair out. Don't do it in here. You have to go to services, but you can run Freddie Mac as long as you're signed up. You can run Freddie Mac in Calyx as well, and not assign it to a lender. Same thing as DU. Okay, I've taught 3 different lenders this, 3 different, like I've been on calls with regional managers telling them, no, you can do this. You can do it just like DU. And they're like, how? Okay, so the other really cool thing is oh my gosh, lenders. Okay, so in lenders, you can directly import your file from Calyx to any one of these lenders. Okay? We just don't use, of course, that's there. Okay. So what I just said is, hey, I want to send this loan to Plaza. It may not do it because I'm on screen share, but okay, perfect. So what it did was it opened a new screen. It's going slow. And it took me to Plaza. I don't know if I know. Hold on a second. I don't know if I know the password for this. Let me check really quick. But if can you guys see the screen that it popped up, or are you still just looking at my Calyx?
No, we can see the screen, Plaza screen.
Yeah. Hopefully this is the right password. Damn it. Okay, it's not, and I don't remember what it is. So, but anyway, once I put the password in, it's going to open me to my Breeze pipeline. So you can directly import directly to the lender inside of Calyx as well. Okay, so it's going to be under lenders here. Okay, and you can import to Cardinal, Caliber, Flagstar, Freedom, Plaza, Quicken, Sierra, Stearns. What this does is this is importing this 3.2 into the lender's portal. The same way that Arrive does, and the same way that you manually do it if you're uploading your 3.2 file to the lender. This just saves you a step. And then you'll know that everything in your Calyx is going to go up into the lender. Okay?
Okay.
It's awesome. It's a really cool tool if you work with those lenders. Like we just submitted a loan, we've submitted 2 loans to Plaza in the last month, and we've done that, and I've done it. Isabel's probably like, what the hell? You didn't tell me that. Sorry, now you know, Bill. Okay. All right.
Okay, that's good.
I
Thank
have
you
the
so much.
password for, oh, I have the password for Plaza if you want it.
No, it's
if you
okay.
want to show them.
I have it saved. I have it saved. It's like in my, it's, everybody gets the point, but thank you. Okay, any other questions about, like, I want to answer your, but how do I do this questions before we get off this call today? Nobody?
If you want to go through, once somebody says, okay, yes, let's start the pre-approval process, which was the question I had asked earlier in the group. If we're doing a pre-approval process, we fill everything out we get all of their documents in, we fill it out in point, then we run the credit check.
Mm-hmm.
And that way we can do a solid approval, and we actually do like DU or LPA, depending on where we're going to go. And then we can do the pre-approval letter if it's approved through that, correct?
Mm-hmm. Yep.
Did I miss anything? Is it really that, just like that?
I keep trying to tell you guys, just breathe, 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 and then go through the steps. Like this, and now listen, you might come across a hard stop somewhere. You might. I do, so the other thing, you know, we choose the OneDrive because I can work on the go, but like, here's my, let's see. You know, you guys would think that I would have it all together with this thing. Like I've been doing it for so long now with y'all, but I still get tripped up on like where things are at on this thing. Okay, so if and this little drop down menu thing is gonna drive me nuts. Okay, so like, here's we do our lender apps. I need to move this over to the OneDrive. I actually have them in Google Docs and I have it in OneDrive. I need to consolidate it. It's because when we first started, we didn't have all of our ish together. And so it's in a couple of different places. But I keep these lender letters in my OneDrive or in my Google Drive. So that way, if somebody's out and about and like, you can see here that I have an initial TBD approval. This is what I send to the borrower and their agent before they go out shopping. with whatever their whatever we discussed, wherever the borrower wants to be at. Okay. I also include on there, and this is a standard stock letter. I have a different one for VA and a different one for conventional and a different one for FHA. Because on a VA, I want them to know that I've reviewed their certificate of eligibility. I want them to know that we've ran them through automated underwriting. I want them to know we have the credit report, their ID, we know where their money is coming from for their earnest money and their down payment, and that we've reviewed their income. Okay, these are the things that I want them to know. Now, I keep this on a OneDrive because if they call me and say, hey, we want to write the offer for 205, can I get an updated lender letter? Well, yes. And some a-hole is going to go on Brokers and Better and be like, oh, go on this app. Yeah, well, I don't subscribe to the app that costs $200 a month, because when I started and it was just me, I couldn't afford to do that. You may work at a brokerage that doesn't subscribe to that particular platform. Great, now what? So you save it in a Google hard drive, in a Google Doc drive, or you save it in OneDrive, because you load that to your phone. Hey, Slim, give me my phone really quick, please. And you can make these changes on the go. Okay, so I have in my phone, I have a file that I put it's called Worky Work, because I'm funny like that. Okay, and I put all my work apps in there. Okay, I have Coldwell Banker app, I have my Dropbox. When I was really slow, I also used to do signings, so I have my Metro Mortgage app, okay? But I also have, this is my new phone, so I haven't moved this over yet. In my Microsoft, I have my OneDrive, okay? And I can literally just go in here to my NG lender, so next gen lender letter, okay? And now I can edit the approval letter for the borrower. I can edit the approval letter from in here, just change whatever I'm going to change, resave it, and I send it with the link. I just push this little edit button right here. Okay. So like,
that's awesome.
The thing that I get and that I understand is like, I used to sit there and feel like I was less than all these other people who were all over social media and they were doing all these things because I couldn't afford to do Pre-Approve Me app, or I couldn't afford to do FLOI. That's not, some of you guys aren't in that position. You're not decision makers. You don't get to decide what LOS platforms your broker owners or brokerages use, right? So what do you do then, right? What do you do then? You set up a Google account, okay? Like, don't do it on your personal one. Go set you up a Google account. It doesn't really care. You're not, it doesn't matter what email address you use. I would say make sure it's something appropriate to your business. But so that you have access to the Google Doc drive, so that you can make these kind of changes for your pre-approval letter, so that you're not always tied to your computer, because you're going to need to be like, I'm in Denver right now. Everything else that I own is in New Mexico. Okay, I don't have my whiteboard here. I don't have everything. If I was stuck, and I do this on a laptop because I can't be stuck to a desk. I can't respond to somebody, right? But if I have my phone and I'm on OneDrive, which is tied to my Hotmail, then I have everything I need right here. And if I don't have it, I just say to somebody, hey, listen, I'm gonna send you an initial pre-qual letter. It's a TBD. Oh yeah, but we want it for 205 and we want it for 123 Main Street. Awesome. Please use the one that I have. I'll be back to a computer in about an hour and I can get that over to you, but I want you to have something in your hands right away. Okay. So utilize the cloud type technology that you have access to, because I get like, and here's the other thing, I'm not going to switch to FLOI. I've got our system, we're set, we do things a certain way. There isn't, at this point, there isn't enough benefit for us to go to a different LOS just so that we can do approval letters on the fly when I can do them on the fly in the OneDrive or the Google app. That's why I have them both. Does that make sense? Yeah. So then once you do your pre-approval, okay, and they go out, then the next thing's going to happen is your agent. So here's, I don't know how many loan officers I have in here, but let me just tell you this. There's like a huge disconnect in the real estate world, in my experience. And my buyers often win contracts because I call the listing agent, even if I have to leave them a message and say, hey, my name is Jackie Dunlap. I have a buyer who's putting an offer on your property on Main Street. Their last name is Jones. And I just wanted to let you know, we've got all their income documents. I've already ran them through underwriting based on this approval price. I tell them what I can tell them. He, long time at his job, great credit score, good file, right? Now, if I, but what I do is I make sure to tell the buyer's agent, yeah, John said the same thing. I win almost every deal doing this one thing. I learned it from my top realtor. You guys don't even know how many realtors will call me and be like, we had 5 offers and you were the only lender that called me. Okay, you guys, how does a real estate agent advise their seller which contract or which buyer to accept an offer from if they don't talk to their lender? Okay, so I always say to the buyer's agent, please CC me on the offer to the listing agent and I will call them. They don't always do that. Well, we can't control that, but we also can, what that also does is it also gives the realtor a good name, like, wow, your lender has it together. And if you weren't their lender, they're gonna be like, oh, my lender does? And I'm gonna keep using this lender, because sometimes the lender comes with power, right? The realtor isn't always the referral partner. I know that I have long before AIM and Brokers Are Better and everybody else said, be consumer front facing. Consumer front facing has been my model for the last 5 years. So I'm the one that's always giving referrals to real estate agents, because people come to me without an agent. We get them qualified first, and then I send them to an agent. Now, here's the other thing that I do. You guys may or may not do this. In Colorado, we have a lot of bentonite in different places in the soil. If you're not familiar with bentonite, it's like clay and rock. So if you have areas that have a lot of bentonite, you get a lot of soil movement and you have a lot of foundation issues. And one of the things that I learned over the many, many years that I've been in and around real estate is that if a real estate agent is not specifically working in a specific area, they don't know those little nuances about, if you shop on the west side of 287 in La Camora, you got to be careful because there's a lot of bentonite, or that used to be a landfill. And so there's been a lot of houses over there that have had foundation movement, right? So if I'm working with a client, I want to know what area they are working in or looking in. I want to know what area they want to buy in, because I'm going to refer them to an agent that specifically works in that area. And the reason is because I am the referral source. And if I send them a referral to an agent that works, so you guys don't know Colorado, but like on the south side, let's say this is Colorado Springs, and on the north side, this is Fort Collins, and those are 4 hours apart. Okay. Now I'm not going to send them an agent from Colorado Springs because they're not going to want to drive all the way to Fort Collins. Okay. But in a smaller area, I'm not going to send a Littleton agent a referral for a Westminster borrower. Now that's about an hour apart, but the Littleton agent isn't necessarily going to know all the little nuances of Westminster, that Westminster is actually a part of 3 different counties. And depending on what county in Westminster you live in, that could affect your property tax. Littleton's not going to know that, because this homie in Littleton only works in Littleton. And this homie in Westminster lives and works in Westminster, and he doesn't know that if you buy in King Carroll Ranch, you better get a freaking structural engineer out there and make sure that it's on solid footing, because you could literally stand in a house and be like this because the damn thing's leaning forward because of the bentonite soil, right? So I'm very protective over my buyer referrals, and I refer them. So I have several agents that I work with that because they specialize in certain areas, or that is the majority of the business that they do. And so I refer my buyers to the agent in the area of the majority business. Now I'm going to tell you one other little nugget of secret. Please know that I am such an against the grain. I like this idea of even trying to think of a way to word things. Our team has one bad review on Facebook from a listing agent, and it was a manual underwriter who previously had a judgment on there. Okay, let me come back to that, Brooke. I'm going to come back to that. But I still do it even if it's not on a clean. John, you still do what? I probably shouldn't, but I still do it even if it's not a clean file. Call the listing agent. Okay, let me see this. What do you do when it's not a clean file? Okay, let me tell you this right now, Brooke. This is going to be really challenging in this environment, but what I did with files that weren't clean is I had them TBD underwritten. I would tell my buyer, I'm really sorry. I wouldn't say sorry. I would say, hey, I want to get your file into underwriting and to an underwriter. I want to know what hurdles we're going to have up front. And I want to start addressing those before you find a property. So I need you to give me an additional 3 to 5 days before you go out. We're going to get this in front of an underwriter. And we're just going to let the underwriter tell us what we need to do. Because then when I call the listing agent, I say, hey, they've actually already been underwritten by an actual underwriter. So we already have automated approval and it's been reviewed by an underwriter. So we're conditioned to find a property now. You can't, because of the Fair Credit Reporting Act, there are certain things that you cannot say about the borrower. Okay, so just be mindful of your Fair Credit Reporting Act of things that you can't say. Yes, I always pitch it like you have it. Listen, if they qualify, there are good characteristics about your borrower. Okay. So TBD underwriting, like there are a lot of lenders that do it. I just don't know who's doing it right now because of capacity. So that's just something that you're going to have to explore. I will tell you in the past, we've done it with Bremen, Plaza, Caliber, to a certain degree, UWM was kind of sort of doing it. Who else did we, 11 Mortgage, we don't use them anymore, but 11 Mortgage could do a TBD. So you just need to get with your account executives and make a mental note of like who's still TBD underwriting things. It just might be hard right now with COVID, okay? So here's the other thing. Make sure you run them in AUS. So when you say challenge file, that could mean different things. You need to know how you're going to overcome those challenges. If you are a manual underwrite because of DTI, do you have your FHA compensating factors in line? Do you know what they are? Because there's only 5 of them, right? And then you could say to your real estate agent, hey, we've got this borrower. We've actually even, they've got a compensating factor. So, you know, we've kind of got we've got some backup goodies in the bag. Could we come up against any problems? Like, I'm just real honest because sometimes agents are like, why would you say that to me? Why wouldn't I say that to you? And then they're like, good question. And they start questioning all the other lenders, like, why aren't you telling me this about your borrower? It's very much like, oh, we're going to go on a tangent a little bit. For those of you that have been around kids, especially a kid that's just started walking, right? And they're like super wobbly and they're always like looking at you for approval, like, I'm doing it, am I doing good, right? When that toddler falls and hits something, even if it hurts, the first thing that they do is look for the adult in the room. And if you are the adult in the room and you're like, oh my God, are you okay? Oh my God, you just fell. They're like, oh my God, I just fell. I don't know if I'm okay. And they freak out and they play on your energy, right? If you go, you're okay, it's okay, get back up, you can do it. They're like, okay, I can help, I do it, right? So they're going to feed off your energy. Real estate agents are the same way. If you're like, so I have this client and like they're kind of troubled and they're going to be like, oh, hell no, we're not. But if you're like, hey, we've got this client, we've pre-underwritten them, we've got them stacked with compensating factor, like, you know, we would normally get this underwritten in front of an underwriter, but because of capacity issues, we can't really do that right now. But we've got all this stuff. We've got all their pay stubs. We've got their bank statements, right? Like, tell them that. Tell them that, because I have people like, so you have their bank statements. You can tell how a real estate agent's been burned before. You have their bank statements. Do you have their most recent pay stub? Do you have this? Yep, we do. In fact, at our company, we don't even issue an approval letter until we have those things. As you can see on our approval letter, those are bullet pointed and we don't send those out unless we have those items. Me specifically, if I'm approving or calling about a veteran, I let them know, and we also already have their certificate of eligibility at my company. We don't send those out until we have a COE in hand, right? So what I was gonna say to you is, here's the other thing that I do for my loan officers or my LOAs in the room. I have never, okay, maybe once I chased a real estate agent. I don't try to be the preferred lender for any real estate agent. And let me tell you why. Let me tell you all the reasons why, and then we're gonna conclude for today. I I was a very insecure young adult. I was a single mom with 3 kids by the time I was 25. I was like, I'm never going to amount to anything because I'm a single mom of 3 kids at 25 years old. So I had a very insecure mindset. I didn't know how to position the value that I could offer to people that I perceived to be much more successful in real estate than I was at the time. So over the years, I worked really hard and was always rejected. And I felt like a middle schooler trying to get into the cool kids group. And I forking hated it. It made me feel so bad about myself. If you think I'm a sissy, I'm sorry. This is the truth. And it made me feel really bad about myself. And it actually, it was against like who I am at my core, because I'm a helper. I want to help. I want to contribute. I want to provide value, okay? If I'm your primary lender, like it's like a gimme, right? And I just didn't, I'm not the person that drives the fancy car. Like I would rather pay my car in full and pay it off in full and drive something that's 10 years old than drive something that was off the lot yesterday. Like my value system is really different. So what I learned and developed over the years was that I didn't want to be one real estate agent's primary lender, because here's the other thing. When they went on vacation, I went on vacation. And I knew that, and I learned this because I had a really good friend who was a realtor, and we were going on a doubles married couples vacation. And we had like 4 or 5 clients together that were all pre-qualified. We were getting ready to go to Mexico, right? So the week before, she's got everybody out shopping, right? The night before we get on a plane, she's like, oh, I got everybody under contract. I was like, I know, bitch. Now I got to get everybody submitted to freaking underwriting the first 2 days that we're on vacation. And she was like, I totally didn't even think about that. So she got to spend our week vacation, and I had to work every day until noon getting all these people. But the thing that I realized is, like, when the real estate agent goes on vacation, so do I, even if I don't have a vacation plan. So here's what I do, okay? Here's what I do. You may not want to do this. First of all, I say to real estate agents, I don't want to be your primary lender. And first of all, they're like, what? Wait, what? Because every lender comes in and is like, I want to be your BFF. I want to be your #1 lender. Here's some bagels. Here's some donuts. I want to be your BFF, right? So I say to them, I don't want to be your BFF. Like, you have a BFF, right? Here's the other thing. If you came in and told me, so I did $11.4 million last year. If you came in and told me not to use Remin anymore because your bank is so much better, I'm going to be like, oh, this is cute. Because I did $11.5 million with Remin. I mean, I didn't do all of them at Remin, but just go with me here. I did $11.5 million at Remin last year. So how are you going to come in here and tell me Remin ain't worth shit when I did $11.5 million with them, right? Think about that pitch. You're going to come in and tell somebody you should be their primary lender and not use the lender that helped them close whatever they closed in real estate last year, okay? So you're already starting off on the wrong foot. What I tell them is, no, I don't want to. What I want to do is I want to be a tool. I want to be a tool. If you do not have a broker in your tool belt, I want to be that tool. Here's why. If you did 11 million last year with Remin, I want you to keep doing that, okay? What I want to do is take these things that Remin doesn't do, whatever their lender is, okay? I'm just saying Remin because they're my #1 lender, okay? I want to take these things that Remin said no to, so your primary lender, right? Think about it. If they're a retail lenders aren't doing anything under a 700 right now, okay? So this is a rush to the gold mine for all of you loan officers in here. You keep doing what you're doing with Remin. I want anything that Remin says no to, or anything that Remin tells your client 6 to 12 months, I want a second look at it, okay? No charge. In fact, I won't even pull your borrower's credit. If they can provide me the loan application that they gave to Remin and tell me what credit score Remin was using, I want to take a second look at it, okay? Because as a broker, we have the ability to take all these other things, all these other relationships that we have with other wholesales, and this is what I tell the real estate agent. I want to take these, what I would say that your lender said no to, or told them 6 to 12 months and I want to take a look at them. I know how hard you work to farm your leads. I get it. You guys work really hard on that. What I want to do is, can I help convert one of these no's from Remen into a yes per quarter? Okay, so when I started pitching this 4 years ago, when I started pitching this 4 years ago, at the time, on the low end of average loan amount was $250,000. Okay, so what I would say to them is, if I can just help you convert one of those no's into a yes per quarter, that's one every 3 months, that's an additional $1 million a year for you. If you're clearing 2 points, right? You leave 20% at your real estate brokerage and you take 2 points or whatever, right? Whatever that is, that's a $20,000 a year increase just for me being a tool in the tool belt and helping you preserve these leads that you've already worked so hard to get. Okay. The other thing is this borrower who was told no by preferred lender A, right? They were already told no. So if you tell them yes, they then want everybody they know to use you because you said yes when somebody else said no. Okay. So the other thing that happens is I'm not every Friday trying to get into 4 real estate offices with donuts and bagels and bullshit that they're not going to send me any referrals for just because I brought some snacks. Like, they don't care about the snacks. Snacks. I like that. My daughter got me into saying it like that, okay? They don't care about those snacks because it's not, what value is it? How am I contributing to their success? What am I contributing to their team? Oh my son, my kid, he gave me the props. Snacks. All right. Right? Okay, so now you can go in and pitch and say, listen, the next time your preferred lender says no, it's just something I want to take a look at. We are signed up with lenders that go down to 550. They're not pretty. We could probably work on getting them up a little bit higher, but we've got those resources. I want to be a resource for you. I want to be able to help you preserve the leads that you've worked so hard for. Like, trust us, we know how hard it is when you finally get someone to say yes and then the lender says no. Like, I get it, right? And I don't ever tell somebody no. I just tell them what they need to do. It's very black and white. I just tell them what they need to do to be mortgage ready. Okay, you're not quite mortgage ready just yet. We need to address these 2 things, and then you'll be mortgage ready. It's how you don't say no. Okay, so what real estate office, what realtors do you know that you could help them grow by closing 1 additional deal every quarter, just 1 a quarter? That's it. Then I'm not calling you every week. And you tell them, and she'd be like, then I'm not calling you every week and be like, you got any deals for me? And they'll be like, yeah, they already know who they're thinking of that calls them every week. Like, hey, you got any deals for me? No, I don't have fucking deals for you. Same as my annoying AEs that come, you got submitting any loans? No, I'm not submitting any loans. If I was submitting loans, they'd be in your pipeline. No, I am not, right? Think outside the box. Think outside the box, okay? And be a person of integrity. If you get a lead from Realtor A, that lead goes back to Realtor A. No ifs, no ands, no buts. That will kill your reputation faster than anything. If you get a lead from Realtor A, it goes back to Realtor A. And pretty much any referral you get from borrower from Realtor A goes back to Realtor A. Hey, Realtor A, remember Jenny Jones? We closed her last year. She had her cousin call me. I've been working here with her for 2 months. But yeah, she's ready to go. Jenny Jones's cousin is ready to go. I gave her your number. Wow. Wow, good looking out. Okay, that's how I've grown my business. That's how I've gotten to 40 to 50 units a year. This year was the first year that I broke 10 million. I've been hovering around 9.5 for the last 3 years. And it was because of going back to my roots and implementing a lot of this stuff, going back to networking, and we implemented some stuff. I mean, we grew the year before. I was at my max capacity. I have a full-time processor now. I have another processor and another LOA now. Like, we're trying, our brokerage hit 20 million last year, right? Because these are all the successes that were born on the back of all these failures that I'm sharing with you guys. Okay. All right. Any other questions before we hop off? Nobody? Okay. I'm going to pare this down to once a week until June. when I'm going to be offering a true course. That's part of the technology that we're putting together. It's going to be like a true course. We're also going to be offering for a small monthly fee. We're going to create like a mentor membership coaching. So in the meantime, it's completely free. The videos are going to stay up, like whatever, but I know that there's still this need for this one-on-one stuff. I know some of these bigger companies don't even have a training department, and we're going to take this on. Why do you have a processor in-house instead of a third party? You're not going to like the answer. When you look at the Brokers Are Better boards, people complain about third-party processors because they're third party and you don't get to tell them how to process your loan. You don't. They're an independent contractor of their own company. Sorry, my son's chewing on his fingernails. They're an independent party and of their own company. Okay, they do it. You hire them and they do it their way. You don't get to control. And a lot of loan officers don't like that, but they also don't want to pay out of their own pocket. So we keep we have a pretty high comp plan at my company because everybody's independent. What they leave in the brokerage does help pay for the processor who's on salary. I control how she processes. She does it my way, the way I tell her, because I sign her paycheck. Okay. I also don't necessarily believe that it's an expense that should be passed on to the borrower because I'm not going to process it myself. That's just my belief system. Me having a processor allows me to do more loans because I'm not in the loans. I'm not working in the loans, right? I'm working on doing more loans. And so that's more of like, I just think that that's more of an expense that I should take on as myself, but everybody has a different opinion about it. But that would be the biggest thing, is because I was a processor, I had a processing company, and there's no way in hell I'm releasing my pipeline to somebody without having control over it. Probably because of my history through the channel, right? Some people are fine with that. They want to hand it off. And you'll see that all the time in real estate. They have transaction coordinators. And it's like $250 gets charged to the freaking buyer. Like, that should be charged to the seller. Anyway, total different tangent. But that is why I do it, because I want it done my way. I guess you could say I'm a brat like that. But it works. It works. And she'll tell you, I mean, she started with me 8 months ago. She was working for a medical spa, no mortgage experience. It's my daughter. So she had very limited mortgage experience. She's been around it her whole life, basically, but she didn't ever work in my company. And in 8 months, she completely runs not only a portion of my pipeline, she processes for 2 other of our loan officers. She runs AUS, she uploads files, she registers. She does pretty much the whole thing. She just started this month balancing CDs and doing closing stuff. 8 months, guys, 8 months. And this is what I'm putting out in there. My son worked for me for about 5 or 6 months and then relocated to New Jersey. He's back. He's going to be open. He's going to work with me. He's probably going to be our branch manager for Texas. And he's been out of it for a year, and he's just picked it right back up again in 4 months. The only thing that we're starting to teach him now is how to run AUS in different systems. And we've signed up with more banks than the last time that he worked with me, and so learning those new banks. But he's going to do it the way I said, because he works for me as an employee, W-2, and not a third-party processor, because I want that control over it. And that's the biggest complaint in Brokers Are Better, is not having control or not having one person assigned to their pipeline, because you can't really run a processing company like that, because not every company performs or closes consistently, right? And we've talked about that. Like, before you get into processing, you're like this. You close 10, you close 2, you close 8, you close none, you close 15, you close 3, right? And so you can't assign one processor who's going to close 10, close 2, close 15, close 3, right? And so you have to give them more than one account. And then what happens when both accounts submit 15 in the same month, right? And then the next month they both submit 3. it would be better if you had like 115 and 1.2 and then they switched every month so that it like evened out. It just doesn't work like that. Okay, what other questions? You can either text it or unmute yourself. Going once. I know there's a little bit of lag, but going twice. Okay, so we'll hop on next Wednesday. If you need me in the meantime, you can find me on Facebook. You can find me an email. I think you can send an email through Zoom or whatever. I'm happy to help. And otherwise, we'll see you guys next week. I'll be back. I should be back in New Mexico next week with the whiteboard and stuff like that. So have a great week, guys. Good luck, good success. I'm rooting for you.